Hello, my name is Pedro Nunes. I am an Etoro popular investor, also known as pmnunes. And in this video, I will explain my strategy for the next year. In the end of the present year, due to a new variant, the markets went down. They are already recovering with the perspective that the new variant isn't so bad as the worst expectations. But before that, and to start the way I will approach my strategy for 2022, we had two target prices from two investment banks for the S&P 500. On one end, we had the Morgan Stanley target of 4,400, and on the other end we had the Goldman Sachs target in 5,100. Despite this, Goldman Sachs has already lowered the GDP projections for the next year based on the new variant. But as we can see, both projections don't give a very big target for the next year. If we see, the target is below the 10% target for the S&P in the next year. I think this is natural because in the 2020 and 2021, the index climbed a lot. We are in a scenario that probably the next year it won't be an exceptional year for the stock market. So being in the end of the year and based on this scenario, it's time to make the strategy alignment for the next year. My portfolio has a concept of diversification, of consistent gains, of lower volatility, even lower than the index, as you can see in the statistics. And in this scenario, these preoccupations must be present to give the best results. We have a very challenging year. We have a projection of not big results. We have still a scenario where the new variant gives us some concerns, not very big concerns, but some concerns. I think we all agree that at this moment we think that COVID would disappear, and that is not the scenario. And maybe we have to live and work with the COVID situation present, controlled but present. And we have, as Jerome Powell said recently, we have a scenario where the inflation is getting to be a real problem, and maybe, as he said, it will not be so transitory as expected. And because of that, in the next year, it's very probable that the interest rates will rise, and that, of course, will affect the stock market. So based in all these premises, of course, that this can change, and I will adapt the portfolio. I'm very active in defensive measures, in changing whenever it's necessary. But based on this scenario, the distribution of my portfolio for the next year will be 40% in index and what I call main stocks. It's structural stocks that should be present in the portfolio. This 40% will be mainly on the American indices, but not only, in other developed countries like Japan, like Europe. And I will also have stocks that I will think that will give a sense of base for the portfolio and that are structural, many of them defensive, not correlated with each other that can give a very stable and a kind of defensive structure to the whole portfolio. The second category will be teams. In these teams, I will try to have a best result based on teams that I consider in terms of macroeconomic trends that will give a kind of asymmetrical return to the portfolio. I will speak in more detail about the teams in the following weeks, but I will have 6 teams. It will be energy, it will be China, it will be cyber security and defense, it will be semiconductors, it will be financials, and the biotech sector. The teams part of the portfolio will be 20%. The third part of the portfolio will be commodities with 10%. The scenario of inflation and the perspective that this asset class is not correlated with the general stock market performance. So with this in mind, there will be a big part of the portfolio that will be targeting the commodities. Regarding the same reasons, Forex will also have an expression of 10%, and mainly because it's, as commodities, not correlated with the stock market. And over the last year, I've developed my skills in terms of Forex, and mainly currency pairs that involve safe haven currencies like the US dollar or the Japanese yen. And I intend to use the Forex to give some protection to the portfolio. And speaking about protection, there's another part of the portfolio that I call protection. And in that part, I will have bond ETFs. I know that the bond market is very defiant at this moment, but there are always ETFs that have some protection to the actual scenario, such as the tips. In this protection category, I will have sometimes the VIX, sometimes I will short index, and I will put here all the assets that at any moment, but mainly in specific moments, that I can use to slow the drops or slow the dips and try to gain money when the market is falling. And this is a very important part of my portfolio that I will use, and I will use actively. The other one is crypto. At the moment, I put 5% in crypto. I believe in crypto a lot, but my strategy in this portfolio is a protective strategy. So I think 5% is good. At this moment, I don't have 5%, but I will look at the price closely, and I will look at not only crypto assets, but companies related to crypto to put in this basket. And as a general rule of my portfolio, the other 5%, it's for the cash reserve. It's something I use to increase protection measures, to buy assets in terms of timing, because we can make money also in terms of timing if the market drops, and we can buy indices or stocks at better prices. So I use actively the cash reserves. This will be my strategy for 2022. I will adapt very quickly if the scenario changes. In the next weeks, I will speak about the teams that I talk about. And I hope that with this strategy, we can continue to have consistent gains with low volatility and continue to have consistent gains.